Hey, sorry, starting with a cough. Not a good sign. Hey, everybody, thank you for joining. Hope everything is working. Somebody will text me if it doesn't work. But today is an interesting video, and we do have volume and everything else. Thank you to the moderators in the chat. Thank you for all the usual OGs for being here too. Happy Sunday for those other parts of the world. Thank you, Green Girl. I love doing this, and it blows my mind every week how the questions and topics change and they coalesce around key themes. So never in my wildest dreams would I have ever thought, literally, that people would be interested in things like QE to infinity and FX exposures and all that stuff. So let's jump in and not waste any more time. 50 slides to get through today. So let's go. First of all, as you guys all know, my key is working good. This is always edutainment. I share what I would do, but please do your own research and I give you the information so you can make your own decisions. First question, jumping straight in, brought to you today's show by coffee, always by coffee. This is regarding pair trading from Gustav Guka. When trading, for example, near USD or Sol USD pairs, would you compound your gains on the initial capital or shift the gains to Bitcoin and only trade a fixed amount? So I think we can go one better. I like what you're doing here, but you can trade on many good exchanges directly between pairs. For example, Sol to Bitcoin, near to Bitcoin, etc. You can do that on things like FTX. You can do it on Binance, etc., and many others. So let's look at the year to date first before we jump into these assets. Now, a couple of key stats that I have here for near Bitcoin Solana that I want you to hone in on is things like the all-time high price. The change over the last 1 year, you can see Near Protocol is up nearly 70% since, I guess, the 10th of July 2021. Solana's only up 16.4%, but many other assets are down big. For example, June 22nd was the summer low back in 2021, and Bitcoin is off a further 40% from that level. But a couple of things as well to look at is the volatility and how these assets do not move together, but they are kind of integrated, but they also have big swings away from each other. So let's look at the percentage of all-time high. Near is 477% of what's all-time high, Bitcoin 230%, and Solana 604%. So that's kind of the key things to look at. Now, what I did was, rather than talk about Sol to USD, which is kind of boring, or near to USD, we went straight from near to Bitcoin pairs. And this is just looking at year-to-date information. This is the near price divided by the Bitcoin price mapped out in a chart. Real simple. The blue line is the 200-day moving average. And you can see the big volatility between these assets. So I put in little blue arrows of where you would sell your near for Bitcoin when it gets very toppy. When the price goes up, that means near is appreciating faster than Bitcoin, and it typically mean reverts. And it typically mean reverts around that 200-day moving average. But remember, altcoins will always appreciate more than others. So at the bottom, the little bottom arrow there, you see sell Bitcoin for near, and then sell near for Bitcoin again. Third trade so far this year, and fourth could be selling Bitcoin for near again. And each time you do this, you can make staggering amounts of money. For example, between the second and the third trade, that was over 100% return just on that in literally 6 weeks. So that's what I would do. Now let's switch gears and let's look at Solana versus Bitcoin, which is different. I actually overlaid near Bitcoin pair and Solana Bitcoin pair and overlaid those two in each other. And it is fascinating to see that they are not really correlated at all. So this one, you can see the Sol Bitcoin pair trades. And in full disclosure, I did swap some Bitcoin for Sol at 0.002 a while back, because that's when I thought it was the bottom. That was around March 14th, approximately. So I sold some Bitcoin for Sol. And then it bounced up around April 5th, 6th, 7th. I can't remember the exact date. Then you sell your Sol for Bitcoin, and you move back. And again, you can see that blue line. That's the 200-day moving average. And you can see we are way, way, way down because Solana has fallen further and faster than Bitcoin. Same thing with Near Protocol. But here you can see everything kind of mean reverts over time. The last 3 trades of the year would be the bottom one down there, where you could have swapped your Bitcoin for Sol at 0.0126 approximately. And since then, it just skyrocketed. That was a perfect trade, and that would have made you, again, more than 100% in less than 2 or 3 weeks. So that is kind of what I would do, and I'm glad you're thinking about this, because at the end of the day, you don't want to use your dollar as a denominator. You want to use Bitcoin. So start wrapping your heads around that and always look for these mean reversions. And we did a detailed video on exactly how to find those. The other thing to remember as well, everybody, is 2 things. Remember Bitcoin dominance. That's on the left. Remember my floor and my roof. The floor is about 39% Bitcoin dominance, and the roof is around 51%. Doesn't really show up there on this chart for some reason. It's hard to see those percentages. And remember also altcoin season, if we are in altcoin season or not. And also remember how much we've deviated from all-time highs and which protocols are likely to return to all-time highs. Just on that note, actually, going back to this slide here, you'll see if Solana does go back to all-time highs, that's a six-bagger, 600% return. If Bitcoin does, 230%. So you get nearly 3x the return on Solana if it goes back to all-time highs. So that is the big takeaway. Great question, Gustav. Next question from Denny KW. My mom has 14,000 in an IRA at Fidelity that's been doing nothing for years. So don't hold fiat for a long time. It's good to have it for market undulations, but do not hold it for a long time. Now, the question is, what is the easiest way to get it invested in Bitcoin, ETF, or transfer to a crypto IRA? You could open up a crypto IRA. Right now, with the way markets are, with exchanges and everything else, stay in Fidelity. Now, we always say here that the Pureform is always best to hold pure Bitcoin, but because she's in an IRA and it's already structured and set up, I would think about this. Now, I'm not plugging Grayscale Bitcoin Trust, but it did have a 35% discount less than 2 weeks ago. Here, the current discount is about 28.12%. What's super interesting about that number of 14,000 is she could technically buy a whole Bitcoin with GBTC for that 14,000. She would actually get, what is it? Just fractionally less, 0.9, whatever, 3% of a whole coin. So that's something that I would probably consider. And Fidelity does allow you to buy GBTC. So that would be the easiest move for her to manage. And also you can help her swing in and out of it because she's in an IRA. She could sell at the top next time, and we will not miss the top next time. Trust me. Next question from Ajmar. I earn 5 to 50% yield a month on YieldNodes. I'm in my 2nd month. What are your thoughts on the risk aspect on this? So, good. Remember, I'm going to jump to this slide first. This is, I don't know if Albert Einstein actually said this, but if it sounds too good to be true, it most likely is. We have learned chasing yield is extremely dangerous, ladies and gentlemen. Let's jump into what we see regarding YieldNodes. Now, in full disclosure, it wasn't a very, very deep dive, and we spent a lot of last year criticizing a lot of things. But here, looking at their website, it does look very suspicious, and it has a high probability of some type of scam. So we advise you to take your money out immediately. They claim to generate yield. They claim to operate, quote, master nodes. And by operating these nodes, you could earn coins via proof of stake. The question you should ask is, which protocols are they operating their nodes on? What are the coins that they are staking? And they don't say any of that anywhere on their website unless we missed it. And their, quote, deposit methods are also very suspicious. They accept Bitcoin, Visa, MasterCard, Bankwire, etc. It's like other scams. They accept Ethereum to give you some crappy coin. Remember, Pureform, pristine assets, always the best. So it's too many red flags here. They have no documentation to speak of. Also, the website is clearly written by someone that only has surface level understanding of crypto. They constantly conflate terms and misusing crypto jargon. It's probably a take your money and run or be a rug pull over time. So just remove it immediately and do not chase yield. If you have to chase yield, check out stakingrewards.com And there you can compare the adjusted rewards from different protocols and research the pool you want to join. So with that, be very careful, especially in this market. If it sounds too good to be true, it probably is. Next question is from KiwiCat. I came across investing opportunities in SpaceX pre-IPO via Dizraptor. An app can be downloaded. Any comments? This is an interesting one. In fact, early last year, I tried to get into SpaceX myself. I couldn't. You had to invest over $1 million, I think, per tranche, even to get attention. Even at that, you couldn't even get in. So what has changed since then? I spoke at length with Dave Lee about this, and he knows a lot about it. But after analyzing a lot of recent news, there's a couple of things we'd like to highlight here. So even if SpaceX IPO'd, I wouldn't touch it. You know from last year, never touch an IPO. Wait for price to stabilize afterwards. Sometimes it doesn't even do that. Check out my video on Coinbase from last year. And space companies are notoriously risky investments with very little to show for it in terms of path to profitability. And it's really hard to say exactly where you're going to get your return on investment. Now, I do know that they're making money from the space station and NASA for deploying stuff, and they'll make money from Starlink, and that's good. But given the current state of things like space travel, space tourism is extremely costly and expensive. It's very hard to scale given constraints. And we have a hard time seeing the long-term viability in the future. Starlink is extremely promising, but recently there have been lawsuits from Dish Network regarding suborbital flights and different frequencies that Dish Network believe that they own. And that could cause a real wrinkle to Starlink. So there's also a lot of competitors like Blue Origin, the most notorious competitor, I think, from Jeff Bezos. Then you got Richard Branson's Virgin Galactic, etc. We'll see. And then also SpaceX's Mars colonization project is definitely a noble cause for mankind. But from an investor perspective, you will never, ever see any returns in your lifetime. So buy Tesla if you want. I think it's a safer bet. There's just too many unknowns, too much risk. And, you know, I admire it. If you could have got me in for early last year, I would have bought some. But also remember, you couldn't get in last year. You can get in this year. Ask yourself why. And the answer is probably because people want to get out. So that's it. Thank you for the question. From Hondaneer, what are the clear or not so clear signs that would indicate a Fed pivot won't happen and the bear market will be extended to the fall and possibly 2023? So, first of all, I tend to be very much alone. I always blaze my own trail. But in this channel, we just look at numbers and quant. We don't listen to talking heads on TV, or we don't trust governments or the Fed. But this is kind of simple view of what happens if they don't pivot. So the Fed, that means the Fed wants all Democrats to lose their jobs because there's an election in November and they will all get smashed unless something changes in the markets before November. That is pretty clear. And maybe Biden and his vice president don't want to continue working, that there were other people. So not that the president will not be elected out of office in November, but they will have no power for the lame duck session that follows in November for the next 2 years. Second issue, maybe the Feds want to crash all markets way beyond where they are now. Third issue, maybe the Fed wants to destroy debt markets, which they are halfway to doing right now. And the Fed wants to drive GDP down 7%. I'll show you the math behind that in a second. And maybe Jerome Powell's favorite movie is Armageddon, because if they continue on the plan of 4 more rate hikes of 50 to 75 basis points, we will have financial Armageddon. Let me explain why. This is the view of reality, and I'm alone on this, but I'm beginning to see people turn around and begin to see the numbers that we see. First of all, the economy has screeched to a halt. Despite the stuff that they say, that GDP is strong and everything else, no, it's not. All markets got crushed. Highest, worst downfall in 50 years in the first 6 months of this year. Consumer confidence at a record low per Michigan University. I can't remember the name of the university. And the Fed's fund rate was less than 1% last year. Now it's targeting 3.8% in early 2023. That is a 4x in interest rates. We are in a full-blown recession. No ifs, ands, or buts about that. Again, I've been talking about that for a while. And we have an empire built on debt that cannot handle rates over 3.2%. It simply can't. And let me explain why. In simple numbers, the max debt was 3.2, the max interest rate, Fed funds rate in 2018, that's a typo, was 3.2% in 2018. And the markets crashed with 9 trillion less of debt than they have now. And that's only 4 or 5 years ago. So basically, they cannot also raise rates in a recession. My simple view of the world. And I would bet my bottom dollar on it. Let me explain with more data as to why. This is the US 10-year, and you can see it's simply not sustainable. This is going back 40 years, approximately. And you can see that we've gone down to a low interest rate environment, and it continues to go down. That blue line is the 200-week moving average, or even 200-month. I think it's a 200-month moving average, sorry. And I have it hidden. And you can see that the 200-month moving average is about 2%. Right now, the Fed's funds rate is over, it's 3.084%. And remember what I said before? It crashed at 3.2%. So we are 0.1% away from crashing if it goes higher. And we have 8 or 9 trillion more debt than we had then. So just think about this. Imagine you had a $30 trillion home and you decided to 4x the mortgage rate on that $30 trillion home. Would that hurt you? The answer is hell yes. So let's look at another way. This is the debt. I calculated this morning between 1934 and 2022. Because this chart, we're going to see a lot of charts that look like this in a few minutes. But you can see here, there was very little debt in 1940, despite a war and everything else, 1960, etc. And then all of a sudden, in the year 2000, things start going vertical. And we've never seen anything like this before. Again, everything is built on debt. Jacking the rates will crush it. You've seen this model many times before. These are my forecasts that if they do 4 more successive rate hikes of 75 basis points or more, they will reduce GDP by 7.67%. It's already crushed right now. And that's just numbers. Again, go back to the simple example of your $30 trillion home and you quadruple the interest rates on your mortgage. It will crush you. So again, they have to pivot. They can't continue unless they want to completely destroy all markets. And that's I mean, why would they do that? That's the question. And the world is very different. This is a different world, and we've never seen anything happen like this before. So next question, which is actually related from AB, is it really possible to QE to infinity? And where is the limit? And what we have to expect in the next 20 years to happen to the real economy? So again, everybody's asking, like, what's going on here? Are they going to pivot? What do we do with interest rates? Is the certain debt too much? In fact, what I should do is pull up the debt clock and show it to you in real time. Let me just let me do that right now, because that is the most important thing to show. And I just want to just point out things that everybody can look at this, and I look at this at least every day. Pull this up, blow it up. And I just want to just train your eyes on a couple of little things here. I'm going to turn off this. All right, let me make sure I can share this actual screen. Sorry about this, everybody. I wasn't prepared. This is the US debt clock. And if you can look very carefully at the US national debt, you can take a screenshot of this today and come back tomorrow. And look how the 30.571, in fact, when I looked at it this morning, it was 30.569. Okay, it's already gone up by $3 billion since I looked at it about an hour and a half ago. And look at the GDP. The GDP is going down. The debt is going up. And that's basically where we are, ladies and gentlemen. It doesn't change. It keeps going. And you know, they say, oh, we're going to do QT and everything else, but the debt keeps growing. The GDP keeps going down. The debt to GDP ratio keeps going up. And that's why I think they have to pivot. No ifs, ands, or buts. Now, to the next question, you can see here, hold on a second, let me pop. I got too many screens jumping around. Okay, so to the next question, there we are. Is it really possible to QE to infinity. So this is a tough one. So let's just jump into kind of what's going on. So the Fed, I believe, has two choices. One, keep raising rates, tighten monetary policy, kill debt markets. There'll be bankruptcies galore, Great Depression 2.0, and 30% unemployment. And elected officials get booted. That's plan A, okay? I don't believe they're going to choose option one. Option two is they'll continue money printing, QE to infinity, like we discussed, have close to 0% rates, like 2% is the kind of average right now, or lower, allow inflation to run hot to reduce debt, hide the real number, the real CPI number, with a contrived CPI number, and continue to debase the dollar. That's the only way out for them. They don't talk about it, but I think that is the master plan. Remember, they got something like 300 PhDs on staff. So let's talk about QE to infinity, what it looks like. This is Turkey. This is their money supply between 1986 and today. You can see it's gone bonkers. So that is QE to infinity. It does happen. And this is the result of QE to infinity. Your absolute debasement of the currency. You just can't keep on printing all that money. Now, another example is Japan. This is kind of more poignant, especially with the recent news out of Japan. Very sad news. But because of the massive amount of debt that the Japanese government took on to bail out their economy in the late 80s, early 90s, the Bank of Japan was forced into a QE policy to infinity. And that was also adopted by the rest of the G7 nations following the 2008 financial crisis. Everybody started going QE to infinity. And they were forced to take on massive debts to bail out their financial system. And look here, this is the impact of a lot of money printing, because this goes back to your original question. You can see that the Japanese stock market is under where it was, adjusted for inflation, nearly 30 years ago. So it's not just the lost decade, it's actually the lost 30 years for returns in the Japanese stock market. That's what inflation does. It debases everything. So you have to own hard assets. Now, getting back to your final question, sorry for being so long-winded because it's tricky and it's really hard to summarize it in 4 or 5 slides. But this is back to your point of QE to infinity. And this is a tweet. Big thank you to Sanjay for sharing it with me this morning. Very timely. So this is from the Market Sniper. I would argue never buy bonds at the end of a macro debt cycle in a hugely proliferated debt market and unsound money everywhere, especially when quasi-Bolshevik orgs such as WEF are actively planning to take down the legacy system. Gold and silver, physical. So the message is here, QE to infinity can't happen forever, but a reset has to happen. Where that reset, where that great reset will come from, we don't know yet. WEF is planning it. Maybe there's behind closed doors meetings with the Fed and other central banks. We'll see. But this next question actually ties directly into that too. It is, again, it's bonkers how everybody's asking about the same thing. This is from Elena. As a European investor, we are taking a big hit in foreign exchange every month from the high Dixie, which is the dollar. How could we better hedge USD versus Euro positions? So, I'm sorry, I'm very, very concerned about Europe right now. UK government is falling apart. There are huge protests in the Netherlands that they don't even publicize on TV. You know, the farmers are striking and they're blocking up food supplies and everything else. Germany's running a monster trade deficit for the first time in 30 years. Euro's at a 20-year low against the dollar. And we ain't even seen winter yet with energy prices, gas prices, natural gas, oil, and the European recession like the US recession. Everything's hitting at the same time, and there are lots and lots of dark clouds. Now, another long-winded answer to your question is, first of all, the European Central Bank has a bunch of issues. Let's just look at the difference and disparity between countries and their debt loads and their debt to GDP ratios and what it costs to finance debt. So this is the 10-year yield premium over its German peer. So basically the cost of financing in Italy versus Germany. And you can see it's a 203 basis point spread. And Christine Lagarde is looking at this and they're trying to figure out how they can start hiking without destroying countries like Italy. Because remember, with that existing spread, hiking across the whole ECB will be a huge problem as we go forward. And policymakers have to try figure out how they deal with weaker Euro members in an increasing rate environment. Let's look at the 10-year bond. It lost over a fifth of its value in 6 months. This is a sign of extreme distress on the part of the borrower. And this is not just Italy. I'm just picking on Italy right now because Italy is a big industrial nation. But think Spain, Portugal, Greece, they're also suffering the same or worse right now. So, and the reason this is just Italy is, again, this is for year-end 2021 numbers of debt to GDP. US is running about 130%. Italy is running at 150%. And you can see the problems that that's causing. And this is the highest level since 2014. And the cost of borrowing has quadrupled since the beginning of the year. Again, who wants to give money to Italy? They're probably going to default. It's a given. Therefore, it costs a lot to finance. That is the problem that Europe has. So, poor Christine Lagarde, she is boxed in. Again, like I talk about the Fed being boxed in, she is out of choices. What's she going to do? She needs a Bazooka bailout to make sure things actually stay on the tracks. And that's really, really hard. So let's talk about some of the euro issues. Weak members have surging borrower costs. They're going into recession. Ukraine is nowhere near a resolution. It's nothing but doom and gloom all over the place. But there is a little bit of a silver lining. And that is, according to what we see on the Dixie, it does look like it's topping out. It did spike to nearly 108. And it came right back down again. And that type of formation tells us it could be out of steam. So I think the time to hedge is definitely earlier this year. I had a question actually before Christmas regarding euro versus Swiss franc. And I said Swiss franc is a safer place. As it turns out, dollar would have performed a little better, but by about 2 or 3% in that time frame when I analyzed this morning. But nobody expected the euro to come crashing down so hard. So bright spot is it's probably too late to hedge. Get hard assets. Think about Bitcoin. That's the way you hedge your portfolio right now. That will preserve your buying power, despite the fact it's still considered a risk-on asset and still tanking with everything else. That's probably the safest bet. Stay away from the fiat currencies. They all have problems. Next question is from Loose Change. I have the unique opportunity to join the digital asset space with Polygon. I'd be moving from a large tech company when you think is a zombie meme. I won't mention who I think I know the company. And would you make the jump given the climate? So this is a tricky one and great question. So first of all, it's hard to say what is a better option without knowing your specific situation, your career, your experience, your role, your title, compensation, etc. But I can say that the current climate is definitely terrible. We are in a recession, and the tech sector is also getting hit very, very hard. Major tech companies have ceased hiring and are laying off people. Crypto job market's probably even worse. It seems every other day we're hearing about another crypto company going bankrupt. And most of the top companies in crypto are laying off their workforces, 15%, 20%, 25% haircuts. Coinbase just laid off 18% of their workforce, and they actually rescinded offers. They had people coming into work, and before they could even get in the door, they had no job anymore. But having said that, I believe you have to pursue what makes you happy. And assuming you have enough in savings to take care of yourself and your family obligations, why not take a risk? We are big believers in MATIC, Polygon. We believe they're critical to the future of Ethereum. Ethereum is the 800-pound gorilla in the space. And, make sure, get a good spidey sense from the team. Make sure they're financially stable and they're not planning layoffs in the future. And that would be kind of important. But having that on your resume will be extremely good for the future too. That'll get you places. So always think of your career as a whole bunch of stepping stones, and you never know where you're going to end up. But try and make sure you round out yourself as much as possible, and you have a good company on your resume to get to the next step. Now, take extra precautions too. There's a couple of little quick tips here to mitigate some of the risk in the current climate. Is accept your job, but don't quit your old job yet. Wait till the very first day of your new job, and when you sign your name on the contract before putting in your 2-week notice at your old job. And you probably have vacation in the bank to be able to not even have to turn up anymore. And the reason is right now, market conditions are typically bad for new hires. So be careful of that. And finally, one of the things that I found most important when it comes to jobs in my life is a good boss is key. And people always chase things like title, compensation, benefits, fancy brands, etc. But for me, the most important thing was to be able to learn from somebody, and somebody that would have your back in a situation. There's too much backstabbing in corporations, corporate America, Europe, etc. And in my life, I've worked at big companies for more than 3 decades. I only ever had 2 good bosses. The rest were all crap. So try find that good boss. It's more important than anything else. So just some random musings, random non-financial advice. So next question from Smoke and Joe. A lot of people have been concerned about this. We've covered it a few times, but can quantum computing be used to crack users' 24-word seed phrase within a reasonable amount of time? So we'll go through this pretty quick. So there's a couple of things that have actually changed. One is, your 12 or 24 word seeds are created via BIP39, and BIP39 now allows specific mnemonic phrase to be used to drive private keys. But you can also have different variations. For example, the English word mother can also be used as a different word in Spanish, like madre, or German Mutter. And that is basically what BIP39 is doing. It's making it even more secure. And instead of expressing your private keys with a bunch of numbers, you can express it with a bunch of different words, and across different languages now too, which is good. Now, the question is, not only are they written in different ways, but using one machine language and the other one using natural language. That means never expose or share either of them. As long as you never share them, there's nothing a hacker or quantum computer can do to break your code. Don't worry about that. Now, the question is, can it break SHA-256, not BIP, like we just discussed? And the answer is, we cover this, but the simple short answer is it takes about 10 million qubits and a quantum computer power to hack your SHA-256. And the most powerful quantum computers right now are barely breaking 100. I think there's one machine that has about 2,000. So we are far, far away from this risk being apparent. So I'm going through it fast, but you can read all this stuff at your own leisure. But D-Day to watch for is always 2028. That's when we believe quantum computing will have enough power to hack SHA-256. But that's another 6 years away. And in the meantime, everything will be quantum hardened. So we're not too concerned at all, but be aware and watch 5 years from now. Look at your watch and check out everything else. The next question is from Dimitri. Will ISO 222 have any impact on a crypto in general? And if yes, which ones and how? So for those who are not familiar with what ISO 222 is, and I'm probably saying that wrong, but it's a new standard for data exchange between financial institutions that helps swift up the SWIFT system. But the big change is it can now incorporate a lot more metadata to be shared across institutions. Not only more automation, faster payment delivery, but also bolt on a whole bunch of data about you and yourself that can be shared. So think of the ability for these financial services companies to do much more financial surveillance and even deny you your money, or if you misbehave or anything else, we'll see. So be careful. And this is just a reminder of the importance of crypto and self-sovereignty over your own money. Think of this as well. It could be a first step towards CBDCs down the line. Who knows? And finally, thank you all for your donations. This is Claire. She was part of a breeding program at a zoo, rescued as a pup, and now living in a sanctuary and loves rolling in the grass. Appreciate everything you guys do out there. Hit the like as usual. Let's go answer some of your questions and see what is on your minds right now. Let me turn off switch camera. Hold on a second. I gotta get better at doing this. Doop. Yes. And a big thank you as well to the mods in the chat and everybody for bringing in these questions from everybody. Let me try and pull it up. Brandon, Brandel, appreciate you too, buddy. Appreciate everybody here. Budini, have you heard of IOTA before? And if so, what are your thoughts about it? Yeah, we looked at IOTA a few times. Let me pull it up. I do, if it is. So we do have it, and I did look at it before. And yeah, this one actually has a very good It has a couple of things going for it. It has a very good crypto compendium score, which means it's kind of not inflationary. It is a little bit centralized and everything else. That's the good news. The bad news is it's a Binance chain platform, and we don't like those too much. The chart looks bad, like everything else in the crypto space right now, and it is not traded at all. There's no volume on it at all. And what is the ranking? It is ranked number 54. Yeah. Again, there's a better place to park money. I wouldn't go out so far on the risk curve with that one, but it does have some redeeming factors and some negatives. I've just never liked Binance Chain's Houdini. So do your own research into it. But it's not bad. What else does it do? Let me see. I'm not even sure what it does. It's medium of exchange. DAG medium of exchange. That's what it is. It's been a while since I looked at it, but I would stay away. Much safer places. This is the market time to just go with the winners, go with the top L1s going forward. One Brightum, best way to generate short-term cash and best way to learn. So right now, the way I see the market is it is extremely choppy and extremely sideways and volatile. These are all good things that you could do to generate money. So for example, you've got Bitcoin. It has extreme resistance at about 22,000. Sometimes it falls down to 20,500 or so. And you can swing, kind of trade between. Covered calls are also a great way to generate short-term cash in this choppy market. Wait for things to spike and buy them back cheap and wash, rinse, repeat. I did that for a long time in my life. So I think rather than crypto, I think covered calls are always the safest way to do it. Pick an asset, get very familiar with it. Play things like the pre-split action, like Google has a big 21 split coming up. Buy some Google shares, but you need at least 100 to sell a call against them. Wait for a spike in the pre-split run. It'll dip after the split, most probably. And we still have some more dark clouds on the horizon. So I believe this is kind of a bear market rally we are in. So use that. Watch your macro. Watch what the Fed is doing. Watch the economic indicators. What's happening in Ukraine, etc. And let that guide you as to when you kind of sell those calls, when you believe markets are at a top. And that is the easiest way. Charles Concannon, based on recent videos, is GBTC safe? So I did do a video on Grayscale, I think it was like in January of this year, about, I was criticizing the funds that they had. They had like a Litecoin fund and a Bitcoin Cash fund. And I said, what are these guys thinking? These garbage crypto funds, why are they doing that? And I was trying to get at the incentive behind maybe. And then they had the large Grayscale Bitcoin Trust, which had Bitcoin, Ethereum, Solana, Cardano, Bitcoin Cash, Litecoin, and a bunch of other garbage. And I was like, what is the point of that? They recently revised that large scale. Maybe there's some of my videos saying, okay, we better get Litecoin and Bitcoin Cash out. They just ripped those out of that asset. But now it's basically, I think it's 94% Bitcoin and Ethereum. So it really is kind of pointless. But I do think there is a lot of regulatory scrutiny on Grayscale, on their Grayscale Trust. So I think it is safe. If they were scamming after all that regulatory scrutiny, I would be very, very surprised. But again, as I mentioned earlier, Charles, Pureform is always the safest. And as we've learned, is we can all be duped. Everything is risky. If it's your only option, yeah, especially at a 35% discount, they definitely have the assets and they can be verified pretty easily. I think they have about 650,000 Bitcoin, but they do have some exposure from, 3AC was the biggest holder of GBTC, which can mean it's volatile. Courage the Cowardly Dog. I have trouble deciding when to switch from stick to your strategy to tap dance shoes. Can you provide some basic how-to? Well, I'm not, this is kind of a tough question that could go many ways. Let me give you an example of tap dancing shoes first. So obviously my two big bags are Bitcoin and Tesla. If anything were to happen, heaven forbid, to Elon Musk, or if a Volkswagen figured out FSD before Tesla did, that would completely change my thesis, and I would flip in a heartbeat and move my asset to something else. So that's what I mean by tap dancing shoes. You got to be prepared for any change, no matter how committed you are to one asset. In terms of my strategy, is heavy concentration in 3 different buckets of my pie. That is real estate, crypto, and equities. Who knows, that third or fourth bucket could become precious metals down the line. You never know, or commodities. But my strategy is always heavy conviction in names, do a lot of homework, and be prepared to pull a pin if something does happen. So right now, I still believe very heavily in Bitcoin. I still believe Ethereum will figure stuff out. In fact, I saw their fees are at 2-year lows right now. I don't know if that's because nobody's using the chain or something else. We'll see. Big believer in Solana because of their adoption and all their other metrics. Big believer in Google. We are technically on Google now. And that's what I mean by it. So another example of tap dancing shoes, if the government's forced Google to break up into different units, I don't know how that would impact my thesis as well going forward. So hope that helps. But build out your strategy, find out what you like, do your research, and it doesn't ever make any sense to own 60 of something or 80 of something. You just dilute away your winners with losers. So find the winners, get in hard, get in early. That's always been my strategy. Juju, John, Bitcoin is plan B, crypto is plan C. I have switched my pension so I can choose my stocks. What would your top 5 stocks be? I can't tell you what to do, never can, but I can tell you what I do. My top stock is, of course, Tesla, and I'm now like 82% Tesla. Number 2 position is Google, and number 3 is it's actually MicroStrategy right now. It is MicroStrategy, and then number 4 right behind it is kind of Amazon and Nvidia. So that's kind of how I structure, but really heavy in the top 3. And in terms of top 5, I think a lot of really, really good names are really beaten down, like Nvidia, but they're going to be hurt by the strong dollar because I think 86% of revenue comes from overseas. So watch that. I think Tesla will have terrible earnings, so there might be a big dip right back down into the 600s again. Be prepared for that. But yeah, right now with all of the stuff that's happened in crypto was great, but it got 2 black eyes, and I'm trying to debate myself internally where I go next, where I deploy first, because I do have cash on the sideline and just waiting for things to settle down, and then I'll go in hard. But I just need to wait for just before the last gray cloud dissipates. It could be that pivot. It could be some other good news. We'll see. And a big thank you for donation as well, everybody. Jeff Hammer, Sir Winston, good to see you again after yesterday. Green Candle, Artem, Buckhorn, AC1, Jabba, how are you? And happy holiday too as well to you. Bora Bora 2030. It looks like we're going out to 2030 instead of 2025. Sleepless, Alina, and a bottle of red. Thank you all for being here. Appreciate you all. And markets are markets. The volume's very low this weekend. And happy Sunday. And Wixley Snipes, appreciate everybody. Thanks all for being here. And I'll see you all tomorrow.